Have you ever stopped to think about where your hard-earned money is really kept? Does your bank truly offer a safe haven for your financial future? The fragility of our financial systems is a harsh reality that has been exposed in recent times. Big banks, once considered too big to fail, are falling like dominoes, faster than we've ever seen before. These quick failures point to issues with how money works, the power of governments to print money at will, and banks lending more money than they can handle. In this video, Robert Kiyosaki offers strategies and predictions to navigate these turbulent times. As big banks tumble like dominoes, some attribute it to poor management, while others blame those in charge. Join us as we unravel the complexities of the financial world and learn how to navigate the maze of money with the wisdom and insights of Robert Kiyosaki. So, are you ready to hold your money and secure your financial future? Let's dive in. You know, it's not just your average day at the bank anymore. We're in a whole new world of modern money troubles, and big banks like Silvergate, Silicon Valley Bank, Signature Bank, and even Credit Suisse are falling like dominoes. It's happening way faster than we ever saw during the 2008 financial crisis. Robert Kiyosaki's been sounding the alarm on this, and it's a wake-up call. These quick bank failures are pointing out some serious issues in how our money system works. You might be wondering, how did we get here? Part of the problem, according to Kiyosaki, is the government's role in printing money. They're creating tons of it, and when that happens, it can lead to some serious issues. The value of our money is essentially tied to the government's word, and these days, it seems like they're printing it without a second thought. This constant influx of new money can have far-reaching consequences that affect everyone, from higher prices for the things we need to, as Kiyosaki points out, potential crisis in the banking system. You see, the story starts with these banks falling apart one after another, and it happened really quick. This shines a light on how shaky our banking system is. It's like a chain reaction, one bank's failure triggering another. And it's not just the banks you might think are too big to fail, like Wells Fargo or JP Morgan. Robert Kiyosaki has pointed out that these large, too big to fail commercial banks are kind of backstopped and guaranteed by the Federal Reserve. But the rest of the banks, well, they might not be so lucky. You might have heard the term bail-in. It's not like the old days where the taxpayers would bail out the banks. Nope, this time, if these other banks go under, it's you who'll be bailed in. That means the money you've got deposited belongs more to the bank than it does to you. You become a creditor of the bank. And here's the kicker. Not all banks are created equal. Regional banks like Bank of Hawaii don't get the same bailout treatment as the big boys. All this is happening because our money isn't backed by anything tangible. It's just the government's word that gives it value. Recent changes in the banking system, like the Bank Term Funding Program and looser FDIC insurance rules, have got people worried about how much the government is meddling in our money. It's like they're taking away the safety nets that prevented disasters before. So we're at this point where economic downturns can expose just how fragile our banking system really is. You know, Robert Kiyosaki isn't your typical financial guru. He's got a unique perspective on banking and money matters that stands out from the crowd. While most folks might blame the banks or the government, Kiyosaki points his finger squarely at the US Central Bank, also known as the Federal Reserve. He's convinced that they are both the root of the problem and a potential solution to the financial turmoil we're facing. Kiyosaki's got some pretty strong words about the US Central Bank. He's making it clear that they're not just innocent bystanders in this financial turmoil. They've been tinkering with interest rates and policies that have caused some major trouble, especially in the bond market. Kiyosaki is sounding the alarm about the bond market, and it's not just some abstract financial concept. The bond market plays a critical role in the global financial system, affecting everything from interest rates to investment returns. Kiyosaki believes it's going haywire, and that's bad news for your retirement savings and pensions. While some experts might reassure you that your money in troubled banks is safe, Kiyosaki isn't buying it. He's concerned that this crisis may be far from over and that the storm clouds are gathering. You've probably heard the term wealth gap before, right? It's the divide between the haves and the have-nots, and it's a significant factor in the ongoing banking troubles we're discussing. Robert Kiyosaki isn't just focused on banks, he's looking at the bigger picture. The wealth gap plays a pivotal role in this financial crisis. While overall household wealth might be decreasing, it's fascinating to see that the poorest 20% of households have actually seen a slight increase from 2021 to 2022. This is a bit surprising because usually the top 1% holds most of the wealth. Real estate is a big player in the wealth game. It's not just about owning a home, it's a substantial asset that influences wealth. Think about it. If house prices fall, people might start feeling less wealthy and could cut back on spending, setting off a chain reaction that affects the whole economy. But here's the kicker. When banks are struggling, they might be less willing to lend money, which could lead to fewer jobs. This ripples through the entire economy, impacting employment and the financial stability of regular folks. So why does this all matter? Well, it's a complex web of connections. Banks are struggling, which means they might not be eager to lend money as they used to. And when banks aren't lending, it can be tough for people and businesses to get loans, leading to potential job cuts. This isn't just about banks, it's about the whole economy and how it affects regular people. What's more, the government's role in all of this is essential. They often borrow money from banks to build infrastructure and provide services. But if banks are in a jam, they might make it expensive for the government to borrow. All this comes back to how secure your money is, especially if it's not backed by anything substantial. So, you might be wondering, how can you weather the financial storm and ensure your money remains safe? Robert Kiyosaki has some insightful recommendations for financial survival. He suggests that in these uncertain times, it's wise to befriend precious metals, particularly gold and silver. Kiyosaki firmly believes that these metals can be your secret weapons against rising prices and global uncertainties. Unlike traditional currency, gold and silver have a limited supply, making them a reliable store of value even when the economic waters get rough. Kiyosaki's enthusiasm for precious metals like gold and silver runs deep. He sees them as crucial elements in your financial defense strategy. According to Kiyosaki, these metals serve as hidden tools to shield your wealth from the erosive effects of inflation and economic unpredictability. What's intriguing is his perspective on silver, especially in the context of the growing demand in the industrial sector. Silver is a vital component in green energy technologies like solar panels and electric vehicles, and the demand is skyrocketing. Kiyosaki believes that this could create a significant shortage, potentially driving up the price of silver. Beyond precious metals, Kiyosaki is also embracing the world of cryptocurrencies with a special focus on Bitcoin. He's even dubbed Bitcoin as the new gold, while maintaining his appreciation for traditional precious metals. Bitcoin has been on a roller coaster ride with significant fluctuations in its value. In 2022, it experienced a sharp drop, losing about 60% of its value, but then it made an impressive comeback with a remarkable 72% surge in 2023. Kiyosaki is suggesting a diversified approach, often referred to as GSBC, which stands for gold, silver, and Bitcoin. Just a quick tip though, watch out for fees when dealing with cryptocurrencies. Some exchanges charge hefty fees, which can eat into your investments. Let's dive into the concept of infinite banking. It's a financial strategy that Robert Kiyosaki is shedding light on as a way to create added security for your money in these uncertain times. So what exactly is it? Infinite banking is like having your very own mini bank, and it's all about taking control of your financial future. Unlike traditional banks, which operate under the fractional reserve system, where they lend out most of the money you deposit, infinite banking allows you to be your own banker. So how does this whole infinite banking thing work? Well, here's a simplified version. You get a specific kind of insurance that grows your money over time. You put money into it and it grows, ready for you to use whenever you need it. This creates your own little financial safety net. It's similar to having your own bank within a bank. The fractional reserve system used by many traditional banks can be risky, but infinite banking provides an alternative way to safeguard your assets. Now you might be wondering, what's the role of insurance in all of this? Well, insurance companies are required to stash more cash to back up the policies they issue. So when you create your infinite banking strategy using insurance, your money is well protected. It's not just about insurance, it's about leveraging insurance to build a robust financial safety net. Kiyosaki is pointing out that in these unpredictable times, having a mini bank and utilizing insurance can be a smart move to safeguard your hard-earned assets and gain more control over your financial future. If you enjoyed this video guys, make sure to subscribe to the channel, like the video and watch this one as well.